We have the markets pulling back a little bit here. What are your thoughts? We had a March higher. We were moving and we hit some record highs last week. What now?
Yeah, so as you point out, Nicole, it's been a great start to 2021. We hit all-time highs on Friday. But I mean, investors need to be realistic. The first day of last week was a bad day. And one needs to remember that is not going to be the low point of 2021. Things are going to be volatile. It's going to go up and down, but we are constructive going forward. Nicole, it all starts with those vaccines. I just signed up on my New Jersey website to get a vaccine when it's available for me. We've got the Pfizer offering. We've got the Moderna offering. AstraZeneca is overseas. I think it will be coming here. J&J later on in Q1 here. And so I think that's going to allow people to come out and re-engage. And some economists say that's worth $80 trillion in stimulus right there. But wait, that's not all. We still have, some of the lowest interest rates in history here. Okay, we're up to 1.13, but when you subtract the 2% inflation rate from that 10-year Treasury, you've got a negative real interest rate. That means everything looks fairly attractive. And finally, of course, with the change in the political scene, we're going to have probably the mother of all stimuluses yet to come, which is going to put people back to work, going to put more money in people's pockets, and that's also going to push this economy and therefore the stocks forward.
So you think there's more room to move higher than there are risks, right? Are there any big risks that you're worried about?
Yeah, there's a ton of risks. I mean, obviously, mutations on the virus could pose a problem. The vaccines don't work. I think the biggest risk is interest rates start to drift up. Been some back chatter that perhaps the Federal Reserve, if this economy takes off with the vaccines and stimulus, may lessen its bond buying and allow interest rates to go up. Of course, that changes the calculation between stocks versus bonds. And of course, we're looking for big stimulus, but as we know, there's a lot of political turmoil in Washington right now to the extent that that allows forces lawmakers to take their eye off the ball in those first 100 days. That could be a problem too. Now, we have valuations are very stretched, but of course, the interest rates are very low. But always remember this, Nicole, 2 factoids for you. 200 of the S&P 500 stocks lost money last year. So start looking in that area. And finally, of course, the Russell 1000 growth stocks were up 38% last year. Value only up 2%. Obviously, that's a big gap. It's going to close in one way. So we're certainly tilting toward the value side of the spectrum.
Right, I see what you're talking about. So tell me about your stock picks. I mean, which ones do you think provide the most value at this time? I know you have 6 picks for us. Which one is probably a great value play?
I think Exxon is the fat pitch here. And I know it's controversial. I'm for a greener climate as much as anyone. But nevertheless, with that 7.7% dividend, trading at just about book value, being the biggest in the business, and also a management laser-like focus to preserve that dividend, to cut costs, to do what it wants for the long term. The stock was 70 in January. Now it's in the mid-40s. So that gives you a 30% rise just to get past the COVID situation. And so, I think that that's also your hedge on inflation. And of course, your hedge on higher interest rates because of that dividend. So that would be the number 1 pick.
Right. I see. Okay. And you have, I mentioned the Walgreens Boots Alliance, obviously in the middle of a deal. It's been a name that's moving higher today. Tell me, so funny how you always pick names that are in the midst of some big news. Why is now a good time to get into Walgreens?
Well, I think pharmacies are going to be where Americans spend their time in the next 12 months as everyone's lining up to get the jab, as it were. And of course, Walgreens has the largest retail pharmacy presence in America with close to 20,000 stores. But that's not all. It also owns Boots Alliance, which is in the UK. Now, I know Europe is down in the dumps, but that's the opportunity because I think ultimately the UK will come out of their downturn as well now that we're past the Brexit messiness. And of course, as they get the vaccine as well, they also have a 40% stake in a Chinese pharmacy, Sinopharma. Who knew, right? And then, of course, they just did a nice deal, I think, with one of their AmerisourceBergen, which gave them cash, more AmerisourceBergen shares, that will allow them to continue their laser-like focus on their pharmaceutical business and allow them to maintain that 4% plus dividend, trading at 9 times earnings. It looks attractive to me.
Right, I see what you're saying. All right, so what's your, just if you were to use one word to describe your market outlook, what would you say?
So I think it's a stock picker's market. We have certainly bubbles out there. You got the Tesla, you got the Bitcoin, you got some of the stay-at-home plays that are up tenfold last year. But as I pointed out, 200 of the stocks didn't do well. You've got huge swaths of financials that are going to bring earnings back onto their books because their loan portfolios are going to get stronger as the vaccine comes out. They're going to make more money as interest rates drift up to the net interest margin goes forward. And of course, I think a lot of your industrials, as the economy picks up strength from last year, I think they will do well too. So I think if you pick your spots, it can be a very productive year for you.